Good day and welcome to the Solara Active Pharma Sciences Limited Q3 FY22 earnings conference call. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Abhishek Singhal. Thank you, and over to you, sir.
A very good afternoon to all of you, and thank you for joining us today for Solara Active Pharma Sciences earnings conference call for the third quarter and 9 months ended financial year 2022. Today we have with us Raj, MD and CEO, Bharat, outgoing MD and CEO, and Subhash, ED and CFO, to share the highlights of the business and financials for the quarter. I hope you've gone through our results release and the quarterly investor presentation, which have been uploaded on our website as well as the stock exchange website. The transcript of this call will be available in a week's time on the company's website. Please note that today's discussion may be forward-looking in nature and must be viewed in relation to the risks pertaining to our business. After the end of this call, in case if you have any further questions, please feel free to reach out to the investor relations team. I now hand over the call to Bharat to make the opening remarks. Over to you, Bharat.
Thank you, Abhishek. Good afternoon, everyone. It's a difficult day for me personally. As you've read probably by now in the press release, I have decided to step down from my position as MD and CEO of Solara. As with these decisions, it was not an easy one to make, especially given that they're navigating some market-induced difficult phase, while I'm fully confident that we will be moving into a normalized situation. I'm very, very confident under the dynamic leadership of Raj, Solara is poised to regain its momentum and get back on track to reach its long-term aspirations. When I first came to Solara in December of 2019, the word COVID was unknown to this world. In the period that I have been here, we have navigated 3 COVID waves and uniquely challenging market situation. We have commercialized our flagship site and initiated a strategically important merger. All this was possible due to the fantastic employees of Solara and the amazing partnerships we have built with many business partners across the globe. These are the foundations of all that we do and all that we will do. I'm also very proud to say that more than 500 million people globally every year take formulations with Solara ingredients, and we enable a healthier tomorrow for them. This purpose is what drives us every day. I'd like to greatly appreciate the support and guidance from the board of Solara, who have been great partners, and a special word of appreciation for Mr. Arun Kumar, founder, from whom I've learned so much. I want to end by saying that Solara's best days are ahead, and I'll be cheering for Solara no matter where I am. Thank you so much. Now I'd like to hand you over to Raj.
Thank you, Bharat. Would like to appreciate your contribution and place on record the effort that you have put in for the growth of Solara, and wishing you all the luck for your future endeavors. Good afternoon, everybody. Thank you for joining the call today. On behalf of Team Solara, I wish you and your loved ones good health and well-being. Before we delve into the business, I would like to share that Solara have now reached nearly 100% vaccination. For the first dose and more than 99.6% for the second dose. We continue to adhere to all the safety and health protocols for ensuring any impact of COVID and that is well managed. Let me start with a bit of background on the context for our reported Q3 numbers. In the last several months, multiple products experienced continued demand stress, especially in the regulated markets. Our efforts to grow in the less regulated markets led to increased use of channel partners. However, significant pricing pressures in these markets, coupled with our need to profitably grow, has meant that there is a stranded inventory across the value chain. To ensure profitable growth and stable margins in the medium term, a strategy called to limit sales via the channel model and move to customer sales, direct end-user sales has been taken. We will continue to make select channel sales based on the history of the relationship with us. To the extent we have taken a one-time impact in Q3, both the top and bottom line by calling back some of the channel inventory, though there was no need to take it back. We expect the situation has bottomed out on the demand side and the prices will normalize over the next few quarters. Raw material and logistic costs continue to be volatile, leading to additional pressure on the margins. I want to now talk about the Q3 performance and give you a flavor of the underlying drivers. On the business axis, few molecules such as Ibu, Usalta and Succinil have seen a decline in Q3. However, most of the other regular molecules, business has remained steady. We continue to gain momentum on new product validation and filings, thereby securing the key elements of our growth strategy. The CRAMS business has been faring well and has grown well with a year-on-year sale of 43% growth. Ibu performance was muted as the market demand was the lowest we have seen in recent years. We anticipate that the destocking process across the value chain will mostly conclude by the first half of FY23 and the situation will likely normalize thereafter. Also, the delayed approval for molnupiravir and demand decline for favipiravir, the COVID product portfolio was unable to fill the revenue gap we had anticipated. In light of all these and the one-time channel inventory impact, the financials of this quarter are under revenues of 1051 million and EBITDA of rupees 940 million negative, leading to a PAT negative of 1,339 million. We expect business recovery from Q4 and normalization of growth momentum starting from H2 FY23. Coming to the salient points about this quarter's performance, ibuprofen is facing twin challenges in terms of continued demand stress as well as raw material price volatility. Volume declined by 12 metric tons in this quarter. Due to this and the lack of OPEX leverage, margins were affected. Input cost pressures on critical raw materials, KSMs, and solvents such as IBB and sodium bicarbonate, coupled with logistics cost increases, further added to the margin pressure. We are taking all the measures possible on both these aspects, including the short-term inventory build-up in key raw materials and on logistic costs wherever possible. Non-value business, barring a couple of products, is trending well. The business is on the path for sustainable medium-term growth with consistent expansion on EBITDA. We have continued our operational excellence initiatives and continue to see OPEX performance getting more efficient by the quarter. The multipurpose plant at Vizag site is on track for a ramp-up in Q1 FY23. The backward integration for ibuprofen will be operationalized in Q4 and will scale up in Q1 FY23. Our CRAMS business is having a good year and our margins tend to be much higher than our generic business. We added 4 new customers, demonstrating good customer traction and highest of business growth in this particular section. We expect that we will have a year record growth in the CRAMS segment. In the CRAMS business, we've been focusing on science-based differentiation via additional capabilities. 2 new proof of concept technologies this year will ensure that the growth will continue in the next year. Our regulated filings are on track at around 10 plus for the current year. We are dealing with a unique situation and the demand-led performance setback is expected to be transitory. We are confident that we will be on track to deliver on our long-term goals. On the merger, we have tracked well on our exercise of identifying synergies, including manufacturing, R&D efficiencies, procurement, cross-selling opportunities, and OPEX efficiencies such as productivity. The merger process with NCLT is going as planned, along with the timelines communicated last time. We shall share updates in the coming quarters. Full integration benefit is expected in the next 12 to 24 months. Requesting Subhash to share some details on the balance sheet and key ratios.
Thanks, Raj. As communicated by Raj, revenue declined due to continued demand softness in Ibu, weakness in some of the key products, and delay in approval and low demand of COVID portfolio has impacted revenue of this quarter. In addition, as informed in previous call, we have shifted our sales policy towards direct customer sales for a better margin realization. To implement that strategy, we took a strategic call to significantly limit our channel engagement while there was no obligations to take back the standard inventory. But in the best course of action as demand recovers and to ensure we have a control on price realizations in coming quarters, we felt it's the right appropriate for us to take back this inventory and start controlling our destiny because we are seeing our demand revival happening and channels carrying an inventory was creating a conflicting situation of price. They were offering lower price. So we felt it's the right thing for us to pull it back and have a control on the situation and start at a much better stage where we can make the price realization and recovery much faster for us. That has led to one-time sales impact in quarter 3, which will get normalized in quarter 4. Coming to working capital, our working capital is up by 306 million during this period. It's basically a mix of COVID portfolio. We have started seeing improvement in receivables down by 2240 million. However, there's an increase of inventory of 1785 million, primarily led by lower sales as well as the inventory return what we have took in this quarter. We expect to take one or two more quarters to bring inventory to a normalized levels. Actions are already in place. A lot of actions are currently in execution stage to bring the inventory and the working capital at a normalized levels. The company is working on right-sizing the working capital, taking various initiatives like adjusting production in line with demand, COVID inventory expected to be sold in quarter 4, and focus to improve the sales mix from distributor to end customer in LLM market. All these actions, what we spoke, will see a result in quarter 4, partially in quarter 4 and full impact in the next quarter, I call it. CapEx for the 9 months is at 1775 million, continue to reflect our focus on growth-led investment, asset turn at 1.3. The higher working capital as a result of net debt up from 6915 million to 8912 million over the course of last quarter. The above trends are expected to normalize over the next couple of quarters. With this, I hand over to moderator to open the forum for Q&A.
Vikram, can we take the Q&A, please?
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Kunal Randeria from Edelweiss. Please go ahead.
Hi, good afternoon. So I didn't completely understand what is the strategic change that you have done that has led to such a decline. So did you stop selling to all your clients in both regulated as well as developing markets?
No, this is more related to our stocks that we have done business with our channel partners. Since the demand was less, the channel partners were also stuck with inventory, and this led to a consequent pricing issue which was also competing with the company. So we have taken back the sales from the channels partners. This is not affecting the regulated markets or the regulated customers.
So, but, see, what I'm not able to reconcile is, so CRAMS has done very well, right? You have shown some, I think, 74% growth or something. And I think CRAMS last year was 10% of software sales, which basically means if CRAMS has grown, the API business would have gone down by around 85-90% or something like that. I mean, there was so much inventory in the channel that you had to take, such a large amount back. I mean, it's a bit of a surprise.
So it's not just the channel sales inventory, it's also that the demand for IBU had come down substantially. And we also took a conscious call not to compete with the channel partners and rather prefer to take a hit so that we have a demand stabilization in the current quarter and the next quarter. Otherwise, the conflict with the competing channel partners with who has our own product would have actually prolonged the problem for a longer time.
Sure. I'm sorry to probe this a bit more, but see, I mean, ibuprofen would have been what 30% or so of your business, right? I mean, so it has to be a lot of other molecules also. So has the, I mean, pricing gone down in a lot of other molecules also?
There is an impact in a couple of other molecules where the price has also gone down, and because of the COVID scenario, offtake of these molecules from regular customers will also come down substantially.
Okay. Okay. So, and in your presentation, you have mentioned that you are getting some inquiries for ibuprofen also going forward. We'll just like to understand at what price point is it now coming? Is it substantially lower than what it was, let's say, a year back or so?
Yeah, ibu pricing has come down substantially, but it is also a double whammy in terms of raw material prices have also gone up, sales will also come down. That's why the margin effect is much more visible. If it was only sales price coming down, it would not have been as bad. But it's even the raw material price increase has also been substantial.
Okay, let me, I think for clarity of everybody, let me just make the revenue decline more, I say, clear so we all understand what happened. There are three things which has impacted our revenue in this quarter. One, the ibu demand, definitely we are seeing a softness of ibu demand. We spoke even in our earlier communication also. Normally we do sell it if we see our capacities, and most of you are aware of. In Pondicherry itself, we have a capacity of every quarter, our annual capacity is around 5,000 ton plus. Every quarter, that's what the ibu we used to sell. But this quarter, because of demand softness, and we decided to go soft on less regulated market to correct the thing, our demand of ibu, normal demand of ibu itself was much lower. We sold almost 1/3 of normally what we used to sell in ibu. In addition, we also decided to reset the sales policy to go with direct customer approach, reaching out to end customers to have a better control of sales realization and also ramping up sale much faster. That also had an impact, and that call for a sales return, or I say the expected sales return of around 120, 130 crore kind of a expected sales return what we have taken in this quarter. Third thing, as we all know, there was a delay in some of the COVID therapy approval. We were expecting in Q3 end, which got delayed towards last part of December, and that sale could not get completed in the same quarter. That was the third impact of revenue decline. Had this three not played around, we would have been on a normal sales trajectory. But it was prudent for us at this to reset our sales policy, reset our go-to-market approach to ensure we don't continue to hit our next coming quarter, continue with the same policy. So we felt it prudent. Let's go back, take a control of our destiny. Let's make sure our revival is much faster rather than going through a slow revival process and competing with the channel with our own product in the less regulated market.
Okay. And just one more before I get back in the queue. Regarding Bharat's resignation, is it something that was always been in the works since the Aurora deal, or I mean, is it something that caught everyone by surprise?
Let me answer that. This is Bharat here. I think we've been working very closely, Raj and I, over the last few months, ever since he joined the board of Solara. So it was not explicitly planned during the deal, but I think over a period of time, we've been working very closely together. As I said, as it's also stated in the press release, I'm leaving to pursue opportunities outside the company. But I leave with full confidence and full optimism for the future, and that's kind of the process that we went through over the last few months.
Sure, thanks. I have several more questions. I'll join back.
Thank you. To ask a question, participants may press star followed by 1 on their touchtone phone now. We have next question from the line of Mitesh Shah from ICICI Securities. Please go ahead.
Thanks for taking my questions. Can you guide us that how would we see the revenues in Q4 and then after an FY23? I know that you said that, but means like this channel means inventories which you have called back, that will completely means returning back to Q4, or it will take time? And the ibuprofen, how the scenario we can see in next quarter and then after?
Okay, let me take that question. Q4, if we talk about, in fact, I just spoke about Q3. Had this one-timer not been there, we would have been around 400 crore plus. Now, since we have done all the right thing which we were supposed to do in Q3, now we are at a stage where we are ready to take off. Other thing, if I just talk about a couple of things, we are seeing IGO revival. In fact, the order book, what we have this point of time, visibility of order book, what we have this point of time is almost or at much higher level what we used to have, in fact, in last 2-3 quarters. The traction, or I say the number of inquiries has gone up very, very, very high. So we do see now things on IGO front getting revived, and we are getting back to our normal level of IGO sale. That's what we expect in Q4. And all our early signs are directing us towards that, giving us a lot of confidence, making sure, giving us confidence, yes, this is expected to happen in Q4. Our CRAMS business is doing well, and that continue to perform well even in this quarter. Other thing which is giving us more confidence, especially I'll say some of the COVID portfolio delay which we have seen. Now we are expected that move that material within this quarter. All these things which I just spoke about, giving us a lot of confidence. Now from this quarter onward, we can be, or we will be pre-COVID level in terms of our top line is concerned. Pre-Q3 levels, what the revenue what we are talking will go back to a similar level from this quarter. Raj, you want to add?
And what about the margins? You still facing the raw material and the transportation issues. So how about the margin before? And the pricing in the ibuprofen as well?
See, I think we'll divide the margin profile between IBU and non-IBU. Our non-IBU business continue to work on the margins that we were doing before the Q3. So it's ibuprofen margins which have come down, basically because of the demand stress and the stocks in the market is one issue. Second is slight rise in 2 critical KSMs. So we have to see the pricing stabilization in the IBU raw materials. We hope to see some amount of consistency coming in this quarter. But in terms of demand stabilization, we see some stabilization happening in this quarter for us.
Got it. Thanks a lot, sir. That's it from my end.
Thank you. Participants who wishes to ask a question at this time, press star and 1 on their touchtone phone now. We have next question from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. Raj and Subhash, now given the disruption which is there in H2, and partly it was there starting from Q2 onwards, it's very difficult to, it makes it difficult for us to look through in terms of how we should look at the potential of the business. So, while I think you're not in the process of giving guidance in a generic sense, but can you just help us guide a little bit now in terms of what is the revenue potential of this business as it stands today, the COVID uncertainties around the portfolio with IBU demand uncertainties being there, in terms of a broad range in terms of where can the business be from a top line perspective next year, before, and then sort of grow on, make it a base to grow on to from there on?
Okay, in terms of next year, let's not give a proper number at this point of time for next year, because we are still in a stage where we are forming about our profit plan for next year. But generally, if we speak about, and if I talk about how the trajectory looks from here, we are already, as I spoke, we are already at 450 crore as a normalized revenue for this year when we exit from this year. Now we do have a new products which are coming and adding to our next year base. Whatever we launch in this year, last year, they are in ramp up phase, and that's where it's going to give us a ramp up. Also, with our merger now coming to a stage where actual, I'll say, leverages will be visible to both the sides, that will be another quick, or I'll say a very quick ramp up of revenue which is going to add to our overall growth for next year.
So I think I'll take the question to one more level as well. In the non-IBU business, we are deepening our customer concentration for every product. So we hope to build a significant traction of penetration for the non-IBU products. That will give us a fairly good, reasonable sustenance. And on the IBU sector, what we're trying to do is consolidating the quantum of sales in terms of quantity, pricing in the market scenario. So what we are trying to do is to see that our quantum of sale goes back to our pre-Q2 level, pre-Q3 levels, and that consistency is what we expect to come back into the IBU sales. CRAMS will continue to grow, and we hope to see better traction for next year also.
So if I were to, just try to summarize it from my understanding, we're looking at a 400 crore, at least a 400 crore quarterly run rate analyzed starting Q4 onwards and running into the whole of next year, plus the upside from the new launches, plus whatever upside comes through from the Arur merger. Is that the right way to look at it?
Perfect. That's the best way to look at it.
That's helpful. And secondly, from a gross margin perspective, Raj, now in the context of where we are, what do you think at a range is the gross margin for the business?
No, in fact, the rate we even earlier talked, we will continue to have a gross margin range of around 50 to 54 kind of a thing, and that's what we spoke all the time, and we are confident once this raw material volatility settles, which we expect to happen soon, we'll be back in our normal range of gross margin,
which is 52 to 54%. Subhash, that's 50 to 54%.
50 to 54. I'm giving a range.
Oh, 50 from 50. Okay.
Yeah.
And
depending on IBU pricing, yes, we do see some quarter may have a challenge because IBU pricing will take some time to reach to a normal level. So first couple of quarters we may see some challenge, but if we are looking at midterm scenario, this is a range which is definitely achievable for us.
So what we're going to do is that on IBU, we are adding a lot of new customers. So what we will do is ensure that the complete capacity is utilized and leave the pricing to the market scenario the way it happens. But in terms of capacity utilization, we expect it to be a complete capacity utilization. That's the effort we are putting on to.
And Raj, you also had the backward integration on IBU coming through. What is the status on that?
We are doing some trial batches in this quarter with the new facility, but I think we expect to commercialize in Q1 FY23.
Okay.
So that will help us to have some impact leverage on that.
Improving the margins for IBU business, yes.
Sure. And lastly, from a business mix perspective, our over dependence on IBU has caused challenges for us this year, along with the dependence on the COVID portfolio. Given the fact that the COVID portfolio is fairly uncertain to call in terms of its longevity. How are we looking at when you look at the business, the non-IBU, non-COVID portfolio? How do you see what proportion do you think that business would sort of settle forward?
No, in fact, if we see COVID, yes, as you said, it's a seasonal. I call it. It's not it's not a linear every quarter business. So we also are, cognizant of that fact. So in our plan for next year, we are restricting the contribution of tactical business, what you call, to a limited numbers. We are not expecting or we are not building a very high contribution coming from tactical business. But non-IBU is a place where we are seeing or we are expecting a lot of growth to come in next year. Primarily contributed by the new products what we have launched or what we just commercialized. Those ramp up is going to help us to grow that business very, very fast.
See, while IBU will continue to be a very important product for us, we would definitely see a progress away as all the non-IBU business would see a steep growth. That's what we're aiming for. We don't want to let go of our market leadership in the product. We also suffer for that. But our focus will be on deep dive of all the non-IBU business to grow, to make it grow as much as possible in every territory.
And once the IBU demand comes, we'll be back. Then there's no stoppage for us. But we are taking this time. We are taking this time to make us more efficient and making sure we run faster in this difficult time and run more efficient and leaner.
So one of the other things we have done as risk mitigation is we are also trying to focus on cutting down on OPEX costs, which will help mitigate the IBU margin loss. And this OPEX reduction that we're working on will give us probably some amount of comfort in terms of risk mitigation of the margin loss.
And if it's on the last one, when do you think would be in a position to share some more details around the Aurora contribution and the synergies?
In fact, we are just waiting shareholders' approval. Once we have in place, after that we'll start sharing Aurora performance as well as consolidated numbers. So we expect that to we expect that to be somewhere in Q1 next year. We should have that in place.
Okay, thank you.
Thank you. To ask a question, participants may press star followed by 1 on their touchtone phone now. We have next question from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah, sir, I'd like to understand that when we had the second quarter call, which was in the middle of November, you had clearly stated that, there's a deferment of shipments of IBU of almost 600 to 650 metric ton. There was destocking with less intensity. Normalization was likely to happen in 3 to 6 months. That was clearly what the management guided the street or informed the street. So what I'm really perplexed and quite, of course, disappointed is an understatement to make. But the fact of the matter is that in November, and if you looked at when we had the call 15th November or 10th of November, you had already started to implement this. So didn't you feel the need to communicate to the investor community regarding this change of heart or change in policy that you have?
See, I think at that time when we communicated, it was more about the regulated market sales and the softening of demand in that. But we really did not expect the amount of hit that we had on the product sale in the less regulated markets and the other markets because of the competition between our own product, what we had versus the inventory in the market, and the pricing was significantly getting affected. And it was a sudden call to probably lessen our sales in the less regulated market because we're competing with our own material. But the moment we saw that it was still not stopping, we didn't want it to be a prolonged misery. That's when we decided to call back the material rather than do any more sales.
Because even in last quarter's communications, we have indicated, in fact, our strategy to move from, distributor-led sales to direct customer-led sales. That's the time as a company, we decided to change our strategy or a sales policy. But we were still expecting we'll able to coexist and they will able to liquidate their inventory and will able to move forward with our direct sale thing. But over the course, what we realized, it's actually creating a conflict because finally end customers is both of us are trying to reach to the same thing, and that it was good for us to remove that conflict so we can take control of the situation and run faster. That was the call taken to take a course correction. Second thing, also we do indicated we expect our Q3, Q4 to be difficult quarters. Yes, the magnitude is something which is much higher than what we expected, but yes, the difficulty of Q3, Q4 or challenging Q3, Q4, we started anticipating even in that call also.
No, but sir, then what you're trying to tell us is in the November 11th call, you didn't call this out very clear. You didn't quantify the impact being so significant for an investor, and it's very difficult to fathom that in just 45 days of the call that you all had, that all of this really transpired. It's very hard for an investor to really digest this information.
I think we took this call in December.
Yeah.
because we saw substantial price drop in our own customers where we sell regularly, and that's when we took a call not to offer anymore. And it's also a call towards the end of the month that we decided to probably call back because the fall in pricing was pretty steep, and we were working on a disadvantage by continuing the sales policy.
And so what was the quantum of inventory that you have called back? Can you quantify that?
Yeah, I in fact mentioned in my earlier stating, we have a sales return or I say expected sales return of around 120 to 130 crore.
Thank you. We have next question from the line of Bhaskar Bukrediwala from Arthya Investments. Please go ahead.
So thanks for taking the question. Just building on to what the earlier participant mentioned and your reply on that, which you said that you took this call in December. Just a basic question on investor communication. In a world of today where every small order by companies are being reported on exchanges, and sometimes they are not even material, something which was as strategic and as important, and I'm sure that this will bring in a lot of positivity to the company also. So it was not necessarily a negative thing for the company, right? Why could company not sort of at least sensitize the investors through a press release on an exchange saying that, look, we are taking some strategic initiatives and that may have some near-term impact on revenue without quantifying it? What stopped the company? I mean, the whole December went, the whole January went. What stopped the company in a simple, normal communication on that?
So this is Bharat. Let me respond. I think the feedback is well received in terms of communication, but once the decision was made for us to sit with our channel partners, understand what's really the value in the value chain, how much is being spoken for by end customers, how much do they have as genuinely stranded inventory, and the various discussions around it were not something that we could get done very quickly. So having made a decision, it took us a process of various discussions over a period of time before we could assess the total impact of this. While the feedback on investor communication is well taken and well noted, and we will act on this going forward, but in this case it was particularly a tricky situation because there were multiple data points that needed to be collated. We needed to make sure it was genuine. We needed to make sure this is really the right call for the business. We need to make sure that there is something happening in the channel, that they're not loading inventory onto us which they couldn't sell. It is genuinely something that is stranded. So all of this is a pretty drawn out process, and that's why we didn't want to rush and communicate something which is not fully quantifiable, which is not fully understandable from the investor perspective on what really is this. We also wanted to assure the investors this is a one-time. So we wanted to be more safe in this and take a little bit more time. Having said that, your feedback in terms of more timely communication is well taken and well received. We hope that we'll never again be in this situation, but if ever there is going to be a chance, we will make sure that we are communicating appropriately. Thank you so much for the feedback.
And as Bharat said rightly, since it was a much, I'd say, detailed, granular discussion with a lot of channel partners, that's what now giving more confidence. We have a control on the situation, and we will do better from here. Because had we done it at a very superficial level, then that confidence, what we are talking for Q4, would not have been there.
So fair, sir. I think I understand when you make a big strategic move and there are a lot of things to grapple with, it is very easy for us investors to sort of criticize, but I think businesses are never easy to run. The whole point was very plain and simple, that you are a large company with a lot of people, large admin staff, a lot of investor relations people. I mean, it just needed one good day to think it and use the right communication, put a small press release to the exchange, that's all. I don't think it would have taken a Herculean amount of effort to do that. If you would have been a small organization, still understandable. I mean, you're a 2,000 crore revenue company and some stalwarts on your board. So for a company of that stature, I was a little surprised to see this very, very surprise element coming. But nevertheless, I hope that...
I think feedback well taken. We'll ensure we act on this side and make sure we have a better, I'll say, proactive communication on this side. We'll make sure that happens.
Sure. Sir, if you can allow me just a couple of questions on the business side, that will be great. So one question is on the gross margins. You mentioned that 52 to 54% is what you will manage and maintain. But just a question again, given that you are sort of shifting your business to more direct rather than through channel, I'm assuming that some bit of channel margins will now get sort of flow into you, and some part will possibly help build your competitiveness through better pricing to the customer. If that is the case, shouldn't your margins expand, and particularly more so as your CRAMS and the non-eyebrow business builds up, which I'm assuming will probably have slightly better margins than your eyebrow business?
I'll say mid to long term, yes, both the contributor or levers what you spoke will definitely help us to expand margin. Short to mid term, yes, because we have a pricing challenge, especially in eyebrow. So that's what we are guiding it, I'll say, at a right level of margin, because we see a challenge in the short term, but mid to long term, your points are very well there, and we have an opportunity to expand the margin.
So over a long term, you're saying that both on eyebrow and otherwise, our gross margin should expand beyond 23 years.
Mid to long term, yes, I agree with you.
Okay, sure. And just one last question. So what we also understand is in eyebrow, there is a lot of supply that is coming in the industry. So even if demand had to revive, which like you said is reviving, what's your thought on the supply that is coming in and the impact that it could have on your utilization, overall industry utilization and pricing?
Yeah, it is definitely a matter of concern in terms of material coming into India because of additional capacity and imports both. But I think we are also trying to make ourselves one of the few people who are vertically integrated in manufacturing to sustain this competition. So that's why our backward integration strategy with IBB and IBAP will help us to sustain this competition. And we'll also expand our derivative sales there. We are one of the few companies that have an entire derivative portfolio on our portfolio. And we are doing best to increase the derivative sales. And we do not want to give up even if there's pricing pressure. That's the reason the backward integration pressure will help us to ensure that our capacity maximization strategy works out in this process. If there is a pressure that's going to come from the market, yes, it is going to come. We're not going to deny that.
Okay. And just one last question. You mentioned that your strategy would be to now reach direct. So that applies for both eyebrow and non-eyebrow business?
Yeah.
Without channel partner?
See, the channel partner perspective that you see in India and slightly in European offices would be different. There, the margins are fixed. It's not buying of material. There, the channel partners are helping us to do a sale and take a commission. So that strategy would still continue. The concept of selling to a channel partner outside and they selling the product would probably be minimal for us. We will do that only with historical channel partners and the relationship is very good and stable.
Okay. Would you be able to quantify the quarterly business broadly, normalized rate without getting into nitty-gritty of each quarter, the sales that was happening through this mechanism where you would sell to the partners and they would in turn sell it to the pharma companies? What sort of broad revenue would that have been contributing to?
No, actually, I put it in a slightly different manner. For a long time when the eyebrow market was in shortage, there are a lot of our capacities being focused on the regulated markets. But when the demand softening happened, we look at all the other markets and that's where the channel partner role became more prominent. So I think from a historical perspective, it will not have the continued relevance from that perspective is what I say.
Okay. I was just looking to...
I'm sorry to interrupt. Would you like to come back in the question queue?
Sure.
Thank you. We have next question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Sir, apart from this 1.2 billion or 120 crore sales return, maybe that adds up to the existing sales of 100 crore. So that is like total of 220, whereas the quarterly run rate was about 400. So still there is some gap there. So what would be the reason for that?
No, in fact, Tushar, apart from sales return, as I spoke, we haven't gone and sold IBU in this quarter because we were making sure we correct our distribution portfolio and product. And instead of selling it to channel, we reach out to end customers. Since the demand softness was there, so we have not gone and paid additional stock or additional IBU in the last quarter. Normally we sell around to the tune of our Pondicherry capacity of around 1300 ton kind of a capacity. Last quarter, without any adjustment, since we decided not to go through channel and also to focus on profitable sales, we gone and restricted ourselves, our sale only to that pocket, and then demand softness of this IBU also continued even in last quarter. So our sales practically was 1/3 of normal what we used to sell of IBU. That was another piece which has impacted the underlying sale what the number normally used to be. And third thing what we talk about was a COVID delay approval that has some impact. And I say small or I say a couple of product impact of like succinil and Osalta, which has seen some softness in export market. That impacted. That also again more so to do with since there was a sale. There was a higher sale in previous few quarter because of COVID. So the inventory now with the end customer is normalized. But the last quarter we have seen the last leg of that sale impact. That should come back to a normal level. So these are the three things broadly if I talk about.
What are the two products which you named just now?
We talk about succinil and Osalta.
Now, secondly, if it was more to do with whatever inventory was there in the system, either your ibuprofen or competitors, if that was the main issue for fall in prices, and with this either your action or any which case demand getting stabilized, just trying to understand, how this change in strategy actually helps if it was more to do with the inventory in the system.
So I think we have seen some green shoots in this quarter, and these are from our regular customers also. And as we have progressed over the last 30 days, we have seen a better offtake and better than expected demand at this point of time. I'm not saying the pricing is going to be better, but the demand has at least given us a feeling that yes, this could be a better quarter for us compared to the last quarter.
And the backward integration project was to come up on stream, I guess in 3Q, 4Q. So what's the status?
So the trial production is already on
by the end of the month.
Yeah, by end of this month. So the trial is going on. I call it this point of time, but the commercial stage production is expected from Q1.
It is very crucial for us to complete that within those timelines because that contributes to our margin impact.
Yes.
All right, thank you.
Thank you. We have next question from the line of Manish Gupta from Solidarity Advisors. Please go ahead.
Thank you for the opportunity. When the Aurora merger was announced, there was a number given which is that you're looking at about 100 to 150 crore of cost and revenue synergies. In context of what's happened in the recent quarter, was that a big picture number, or do we have some specific numbers now of what synergies are expected?
That was a big picture number at that perspective on a combined entity, but there has been a lot of work that has gone into that to make that operationalized. We are bringing in the operational synergies as we go ahead. Probably that will get reflected a part in this quarter and a part in the next quarter as well from that perspective.
So Raj, could you talk about what are some of the cost synergies that you see? I mean, what's the quantum we are talking about?
At least on a yearly perspective basis of 50 crores.
Okay, there are different part of cost synergy.
So this cost synergy is multiple buckets, but cumulative amount I'm trying to come around approximately is around the 50 crores.
And could you share where these come in from? What area?
See, R&D synergies together, where we are trying to make more, the teams at 2 places rather than 3 places that we have today. And in terms of capacity utilizations, in terms of OpEx reductions, in terms of manpower synergies, and operational excellence, which results in specific cost cuttings across every unit. And that's a combined synergy that we are looking at taking experiences of each other into consideration and together ensuring the strategy is completed on both sides. And we've also done, Arun has been doing a lot of outsourcing. All that would also stop, and a lot of that would now get into the capacity utilization of Solara. So that outsourcing cost will also come down substantially for both sides.
Okay. And is it possible to get 9-month revenue under the buckets of IBU, non-IBU, and CRAMS under these 3 buckets?
Normally, we don't give, precise numbers under these 3 buckets. But broadly, if you see our commentary and the way we put our investors call, you will have a fair idea how these buckets are. But as a company, we don't share very precise category-wise revenue.
Yeah, but Subhashji, you will agree that this is quite an extraordinary situation we are in right now, where there are so many moving parts, right, of write-offs and guidance and all that. So to some extent, if you can give some directional numbers, it will help, because struggling to understand how different parts of the business are growing right now.
I take your feedback. We discuss internally and see how and to what extent we can share this information, but we'll revert back to you.
Thank you.
Can we take the last question, Vikram?
Thank you, sir. We take the last question from the line of Monish Shah from Antique Stock Broking. Please go ahead.
Yeah, hi. Thanks for taking the question. So just one question. Which are these new products that we are talking about? Can you name them, which are expected to deliver, better margins and growth?
It's not just a new product. It's a combination of new products and capacity optimization of the existing products, both. And also new markets or new territory additions for the products that we are having. Some of these products are not sold in many territories. So what we are doing is to increase the basket of the product sales in the various markets also. So it's capacity optimization, new products, and also new territories for existing products.
Okay. So you've basically converted the Vizag capacity of ibuprofen into multi-purpose capacity. Is that
absolutely? Yeah.
Okay. So from this capacity, basically you will be servicing the new products, and IBU as such, going forward, will be a reduced capacity product.
See, based on the demand, we will be able to go back for IBU manufacturing in that site. So the flexibility is always there. But what we're right now doing is we're also using this. We're going to use this capacity. Part of the capacity is ibuprofen backward integration. Part of the capacity is for the multi-product facility, which is for doing validations of all the new products and filing from that site. And the pure ibu capacity for the API, that is what we are now doing, multiple products. Some of the Arrow products are also getting migrated there. Some of the new products of Solara are also getting migrated there, so that it gives us better cost perspective from a new site.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thanks a lot for all of you. This is a one-off quarter. We have extremely good confidence that we will bounce back in the Q4 with a decent number. And going forward, FY23, we will put in a lot of efforts to make that come back to an FY21 level, but that's the efforts we're going to put in. Thanks a lot, and we're extremely sorry for this one-off performance.
And thanks everyone, and stay safe. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Solara Active Pharma Sciences Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.